Hi everybody, it's FIBO Group, and you are watching to the Market Watch review. The Japanese markets did not follow the global trend and advance. This is what happens after the government wins the upper house election. The Hang Seng, home to many Chinese tech companies, fell 2.8% to lead the losses. Stoxx 600 Europe is making a 3-day advance and is down almost 0.5% at midday. S&P 500 futures are down 0.6%, while NASDAQ futures warn of a possible 4-day rally. Today, the US dollar is being bid against all currencies. This encourages not only good news from the US, but also bad news from China. The low last week for gold is still very close. The nearest chart support could be $1,720. August WTI sold for $105. Breaking the $10,150 zone could signal a test of last week's lows of $95. Asian Pacific market. Japan's ruling alliance gained more seats in the Diet's upper house. The LDP and Komeito Party accounted for 7 to 6 of the 125 seats at stake. Prime Minister Kishida is a protege of Abe and will continue to support the traditional LDP policy of fiscal and easy monetary policy. The dollar rose slightly to JPY 137.25, a new 22-year high against the Japanese yen. Initial support is now in the JPY 136.50 to 136.70 region. Today, the yen is weaker than sterling and the euro. Cross rates are not much change. The Australian dollar gained 1.1% in the last 2 sessions, but is now giving back a large portion of that gain. Market of Europe. The governor of Greece's central banks is onto something. Sturner has acknowledged in a weekend interview that fragmentation is a result of EU reforms lacking. 2 other topics are being discussed today, in addition to the ECB meeting next week. First, almost a dozen candidates have declared for the role of UK Prime Minister to replace Johnson. The second is the European energy crisis. Regular maintenance is required on a key pipeline that transports Russian gas to Europe. The euro traded at almost $1.02 after hitting new lows of $1.0070 for the 20th year. Today, it was offered again and traded at almost $1.01. Market of America. The Federal Reserve will allow $30 billion of treasuries to be withdrawn this month and next before increasing the amount to $60 billion in September under its balance sheet roll-off operations. The Fed could buy between $5 and $6 billion of the 3-year note, according to some estimates. The market expects the Bank of Canada, despite Canada's disappointing employment report prior to the weekend, to announce a 75 BP increase when it meets Wednesday. Today's risk-off mood is threatening the 2-day recovery of the Canadian dollar. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.